Hello, everyone. First of all, you gotta do this. Hello, everyone. Welcome to the stream. Alright, so today I'm gonna share some special things about the model I've been practicing. So first of all, I'm now trading Bitcoin. Let me actually start a recording so you have one person in here. So usually every Saturday I post a video of me reviewing my data, but this week I have a lot to talk about, and I actually want to. Well, I was gonna backtest anyway, so I thought I might as well stream it since I'm free every Saturday. So right here, I was backtesting Bitcoin for the model I've been trading recently on the Nasdaq. Now, Nasdaq is good. It's just not. My girlfriend actually found Bitcoin is much more profitable, because I also found that the years that the Nasdaq had the most volatility were the best years, and the years that had the least volatility, like historically low volatility, were the worst years for my model. So obviously there's a correlation between volatility and and my trading results. Now, there's a lot of things I didn't consider, but I found a losing streak in Bitcoin. Obviously Bitcoin is very volatile. I mean, this is an asset that's very uncertain in terms of its adoption in the future, and so there's a lot of lot more speculation on it. And well, it just makes sense that if my model benefits off volatility, I should go trade Bitcoin. So I wouldn't. Now, I wouldn't say it's always volatility, though. This is what I found, because there's a period here in April, March, kind of like early March to June, where Bitcoin had lots of losing streaks. Like, I found a lot of losing streaks here, and I realized that this was a very big trend. Now, whenever you trend like this, usually it's not very volatile, because price is moving very directionally and it's not going up and down. So on the daily chart, though, this looks like a period where there's not much volatility. But if you were to climb down to the hourly chart, intradays, we go up and down quite a lot. Like, maybe not so much in May, but the volatility was very high. Like, you can see some of these moves are not very directional. There's a lot of down close candles mixed in with the up close candles, and well, the data doesn't show that there was low volatility, but what it does show is a realized volatility crush. So I was asking ChatGPT what this meant, because I was trying to figure out, okay, if there wasn't, because the Nasdaq didn't react like this during the same period of time. The Nasdaq this year has been really good all year round. So the Trump tariffs have caused volatility, but you see, for Bitcoin, it was a lot different. There was a lot more factors involved There always is with Bitcoin. There's always something going on. But specifically in late 2024, the ETFs were approved, for Wall Street to start selling Bitcoin ETFs. And there was a lot of volatility ahead of this and speculation. So if you look at the ATR down here, this red line, this just measures the last 14 candles, the average range. So you can see over here it's at 5K as I'm going through. It reaches almost 6K, and I'm not sure when, but there's a moment where it's almost at 6K. I don't know, sometime late 2020, early 2025, late 2024. So it then drops, and as it's rising here, the ATR, the range is dropping, and it's just like this miscorrelation. It should be, if volatility stays the same, going up. Now obviously the daily chart is disguised as low volatility, but inside the intraday profiles there's a lot of volatility. So what this told me was, I started researching on why this was. Why does the ATR, why does it go down? There doesn't seem like there's much volatility, and it's very directional. But intraday there's a lot of chop. So what happened was a lot of option traders were unwinding their options after that the ETFs were approved. So I have a ChatGPT query here where I asked what a volatility crush is. I first learned about it on Grok. I was doing a lot of research last night, and I wanted to kind of revise it this morning. So realized volatility crush happens when actual volatility of a market drops sharply after a period of high movement or uncertainty. So what that uncertainty was, and this is what I'm going to backtest today. I want to see if this period was just as profitable or unprofitable as the other period where there was a trend. To see, the goal today is the first goal I have is to figure out, is my model unprofitable when price is trending on the higher time frame, or is this unprofitable when we have realized volatility crushes? Because it could be either. So there's a lot of, like, NASDAQ has been trending for most of the year, and it's been pretty good all year. So that's why I don't think that it's when it's trending. Which is why if I go back to November here where there was a lot of volatility, I might have to use bigger stops, but I'm hoping to see a lot more moves that I might get wicked out, but I want to see it at least go in my favor after getting wicked out, which just tells me if there was more volatility, I need to use a bigger stop. But anyways, realized volatility is the measured volatility based on past price data, and implied volatility is the expected volatility. This is actually very important. This is how traders think it will move. So we had the ETFs were approved, and then the market eventually stabilized, and it created much calmer movements, which it stabilized around June. That's when profitability came back to my model. This is it gives an example. It doesn't really matter. We're not gonna look at that. So I said, give me recent examples on Bitcoin, NASDAQ. Give me dates in the range of months. So first I had asked for just to give me recent examples. It didn't give me any dates, so I don't know. And then it actually gave me the exact period where I was unprofitable. It said that there was high realized volatility, so there was actual volatility in the market late 2024 and February 2025. Speculation around Bitcoin ETFs. Now Bitcoin is being adopted. What does this mean for the model? For Bitcoin, and everyone was wanting to get in. Some people started taking profits though, and there was a lot of volatility. So that's basically what that means. And then the trigger, people started unwinding their options. Demand for Bitcoin dropped, for options, and we started consolidating and being very calm. The actual realized movement dropped fast, as I showed you in the ATR. You can see how it was like 5,000 and it dropped to 3,000. This was the start of the realized volatility crush. Volatility collapse as post-event uncertainty drained from the market. So I don't think, and this is very consistent with what I found on the NASDAQ, but every time I had a lot of losing streaks on the NASDAQ, I always looked at the VIX and it was sharply decreasing, which is when volatility goes away from the market. So this is another market where I just proved that every time volatility drops sharply, I don't perform my model. Right, so what I'm trying, I'll get to actually what the solution will be, how I can use this to my advantage, because now I feel like I have a lot more evidence to really feel certain about this. But Um, yeah, this is a very big example though. The crush in numbers, you don't want to read that. And this is why it happens. Uncertainty is removed, no more risk. Volatility tends to revert after extremes, so it went up to an all-time high, and then it crashed down back to 70K. As options decay and open interest drops, delta hedging activities decline, reducing intraday feedback loops. I have no idea what that means. Liquidity restoration, spreads tighten, volatility drops, psychological calm, narrative cools off, fewer forced liquidations. So the energy drains out of the system, same way a storm fades once the pressure equalizes. So, yeah. And if I just want to show you on the NASDAQ, and then I will show you on the VIX. Actually, no. We'll just go on the VIX itself. I should have it in, so in 2020 was another very good example of exactly what I'm explaining here. My model was profitable in 2020, same model. But then it became very profitable when the volatility was insane, and I had to use much wider stops. I expect the same thing when I'm gonna go back right now. I'm just gonna go back right now, and I'm gonna backtest Bitcoin in November, December of late 2024, basically in early 2025. I expect my stops to have to be a lot bigger because if we had a VIX for the Bitcoin, like a volatility index for the Bitcoin, I would expect to see something like this, where late 2024 we have a huge rally, and then it gets adopted as an ETF. Eventually things calm down and traders start unwinding their options. Then I'd expect profitability to leave my model because volatility is crashing very sharply, which is exactly what ChatGPT just described. And yeah, so this would basically be what I'd be looking for. Now, how I can use this to my advantage, like why is this good that I figured this out, is because I'm not trying to predict when volatility crashes are going to happen. I can probably anticipate them and maybe risk less. But when do I really know once things calm? Like, I don't have the time, and I don't think I have the knowledge yet to be able to, like, that's really an economist's job or a financial analyst's job. I mean, I guess I could, but right now I don't really have the time. What I'd rather do, and I think it would be better, is find a market where these things don't really happen very often. And for Bitcoin, maybe it's not going to happen anytime soon, but one thing that I was looking into is oil, and that's the other thing I want to maybe backtest today. But CL, we'll go MCL. Thing is, with oil, we don't have the same mechanics where the ATR, the ranges of the day, drops as price is trending. So, like, this never happens, right? Every time price starts to trend higher and have big moves, the ATR is also rising. Maybe not in late 2024, but there probably is some times where these things happen, like maybe also here, 2022, and that might have been because of certain events that happened that caused shocks in the oil market, because maybe some war broke out or some trade war happened. But all in all, like, this oil has been, by the way, it looks from the daily chart, looks like it's just the best for my model, right? Because you see Bitcoin, you have these huge trends, NASDAQ, you have these huge trends, and then you have volatility crushes. Oil doesn't have that, so oil doesn't play with the same rules as a lot of these other markets. It's much more predictable. So I have a Grok query. I'm trying to show here. So I was talking to Grok and asking what markets would this happen less. Perfect volatility playground. This is micro oil futures. So Bitcoin is comparing it 24/7 chaos. I don't know if that's, these are just examples. $600 million liquidation in a day. Trump tweets at 3 a.m. and realized volatility spikes and crashes all the time. But oil is a lot more stable. It makes sense why it's always used everywhere around the world. And the thing I found with oil, I just backtested 1 month real quick, and every time I kind of looked at it in the past, Oil, there are some good moves, and my model can definitely be profitable, but the moves aren't big. So I don't expect to see 12-hour trades, 10-hour trades, 9-hour trades, like I do on Bitcoin. Even 6-hour trades, I feel like would be very rare. Just from what I've seen, I backed this in one of the best months this year so far, October, and this is just what I've seen. It's not very, you know, it doesn't want to move like these huge moves that just are like insane, and you can get like 12-hour. So oil might be a more stable market, but it might also make me less money, and that's why I really need to backtest it for a long time. What I'm thinking of doing is whenever I expect a volatility crash to occur, maybe this is something I could do every month at the end of it or beginning of every month, as I do sort of like an economic analysis or macroeconomic analysis of different markets, and then see, okay, well, which ones are higher risks having realized volatility just evaporate. So yeah, that's basically what I could do. And then if I feel uncertain about a market, I could switch to oil or continue. But for now, I'm going to continue trading Bitcoin until I get more data on oil. And I also want to start backtesting what I was going to backtest. I just took, I don't know how long I just yapped for, but like 14, 15 minutes. So yeah, so I'm gonna upload this recording to YouTube. I'm gonna stop the recording here. I'm gonna keep the stream going. But I'm just gonna backtest on the stream, and then the recording I'll have uploaded, because the recording really holds most of the information, and I'll probably record again just to summarize the backtesting. But yeah, so I'll stop the recording now, and I'll just be backtesting. If anyone's watching, feel free to comment. Feel free to ask questions. I'd love to hear someone's input, someone's opinion, or just to say hi. That'd be great. Otherwise, doesn't really matter to me. Yeah, so anyways, what month exactly was I gonna do? Where do I start? I'm gonna start October 1st. So it would be MBTX 24. What? Oh, oops. MBTV 2024. Yeah, futures contracts for Bitcoin always start at like near the end of the month. Volatility starts coming around the 25th or 28th. Let's do 27. I think 28 is when it ends for the last contract. So we'll do 27. So yeah, basically the model rules, for anyone that maybe watching and is not aware. You have a 300 point stop. After 3 hour, I start to do the trendline exit strategy that I do. And then this one loses, so I'm gonna also lock this on Notion. You might have to use a bigger stop, but for now we're just gonna use 300. September 27. What the heck? Oh, oops. Wait. Oh, I do that again. I always make sure to get the entire day. From 1800 to 1800. And so 9:25 is in between midnight and 8:30, so no trade. $9.25 is beneath, but it crossed midnight after 8:30, so no trade. $9.25 is beneath midnight and 8:30, so we can trade. Go long. This would have lost though. So here's where I'm gonna keep this in mind. If I see I can use bigger stops, I won't log anything just yet, but let's say we double my stop size. Yeah, then the RR wouldn't be enough to even start using the trendline exit strategy. So it doesn't make sense yet to double the stop. There's not enough volatility. This would have been a losing trade. Lock that real quick. Just take a screenshot. Some second. Another case where it's gonna lose, but beneath midnight and 8:30, so we can long at 9:25. Another loss. A 600 point stop would have, yeah, same thing. See now the RR doesn't, it's not volatile enough to, oh, I'm not sure exactly when volatility is going to really spike, but it might spike. So I'm just going to keep an eye for that. And I'll increase my stop size. Then 9:25 here touches 8:30, so I could go short. There's another loss though. Yeah. So you got another viewer in here. Welcome to the stream. He's backtesting today. So here's where we reach 3R. We're beneath midnight and 8:30. We've reached 3R. Now this is where I now exit my trade using a trend line. So when it's steep like this, I don't draw the trend line because there's a lot of times where it just pulls back a little bit and it breaks the trend line. I wait till see a lower low where bodies close and make a lower low. So that would be right here where the body closes beneath this body. And then 3.1R. So that makes up for the last 3 losses already. We're in profit. No. This might be like a break-even trade. Okay. Doesn't even reach close to 3 hour. Okay, so here we're above midnight and 8:30 at 9:25. Hey Theo, how you doing? Good. I've been taking a lot of time to backtest, so I don't know if you were here at the very beginning, but I'm gonna post a recording of the beginning of the stream, and then also the results at the end of this. But the goal, what I'm doing right now, my goal is to see this session in Bitcoin from mid-March to June was very unprofitable for me, and I wanted to know why. And it turns out that there was what ChatGPT describes as a realized volatility crush. So that's when volatility was very high ahead of this, and then all of a sudden it gets flushed out of the market and things stabilize. And it reminded me of the VIX. So I remember if you heard me talk about the VIX, but every time that the VIX crashed sharply, even in 2024, I had a losing streak. So I was very unprofitable, but it was very profitable ahead of it. Sometimes not very profitable, but it depends how volatile it was. But usually it just meant there was more trades, which is why it was highly profitable. But yeah, this sharp crash was not very profitable. Same thing as every time it really crashes sharply. There was always periods of losing streaks because my model benefits off volatility. And when volatility quickly leaves the market and things really start to calm and either trend or just be flat, I don't make any money. So I realized the same thing was happening on Bitcoin because I don't have a volatility index for Bitcoin, so it's a lot harder for me to see and visualize this relationship. But as I was asking the AI about periods of like sharp decreases in volatility, it said actually exactly that, that there was a realized volatility crush. If I can bring it up. Oh my god. Right here. So I asked, can you what a realized volatility crush is? It explains it here. It happens when the actual volatility of a market moves day to day, drops sharply after a period of high movement or uncertainty. So there was a huge trend, and I want to see if I was trying to figure out if what makes my model unprofitable is a trend or volatility sharply decreasing. And so far it's been volatility sharply decreasing. So I want to still see moderate profitability in this green zone. That's why I'm backtesting this right now. And then also after I'm done this, the next project I'm gonna work on is oil, because oil doesn't have much volatility, realized volatility spikes or crashes. Oil is a lot more stable, but the moves don't tend to be like 10R, 12R. So I don't know if it's gonna be more profitable, but what it might be is psychologically easier because it's more consistent. What I can also start doing is maybe once I get more knowledge and more educated on this, I could start to do macro analysis of different markets to try and figure out which ones are at the highest risks of having volatility just flushed away from that market. Like, for example, if it's COVID and everybody's getting paychecks and they're all investing their money into high risk assets, then maybe I'm going to say, oh, okay, maybe it's better for me not to trade right now or to risk less because I'm expecting a losing streak to come once all this starts to settle. Things like that. That's what I'm trying to come to that conclusion. But first, I got to backtest and get the data. So that's what I'm doing here. I'm backtesting the model in the green area, the period, and then seeing how it's going to perform. If it's going to give me similar results as the red area, because there was no volatility crush in here. So I'm trying to see that relationship right now. That's basically what I do every week. I try and do something like that and set goals for the model. Otherwise, my trading updates. Hold on, let me log this trade first. So after I reach 3RR, I use my exit strategy, which I use a trend line. 3RR is reached here. Now I'd start to find a trend, drop a trend line. So I could use this one, and I adjust it if there's a better one. If it's a steep trend, I don't use it. So like I wouldn't look at this trend because this is just a slight retracement. But what I do once there's a very steep trend is if I see that we start to make higher highs, then I get out. So I think there was another example right here where we made a lower low after 3R. The bodies made a lower low, and then I got out. That's basically how I use that trend rule for my exits. It's my girlfriend that showed me that. It's I don't think it's an ICT strategy, so I gotta keep this quiet. But I would be getting out at the close of this candle right here, 6.12R. So that actually makes the model profitable again. A lot more trades. That's what I'll say. Usually there's not this many trades. 6.12. Yeah, Nolani. She started backtesting Bitcoin, and it's more profitable than Nasdaq. Only because there's more volatility, which makes sense. And the more volatile the market, the bigger the moves, the more trades there are. But also, the higher risk that we have volatility crushes and we get these losing streaks. If I can figure out a way to avoid the losing streaks, the win rate could be 40%, 50%. And average winning trade could be over 4R, which is, well, that's really, really good. But that would take a lot of work. It won't be easy. I'll have to literally become macroeconomic analysis, like a whole Eurodollar University employee. This is a trend, so whenever it trends very directionally in Asia and lens session, I ignore whatever happens. I don't trade. Here I could go short, but again we have a trend, so I ignore whatever happens. Go to the next one. Right here at 925, we're above both levels, 925, 940, so we short. And this would have, well, very much lost. This is in between 8:30 and midnight, no trade. How have you been though, Theo? I'm hoping to stream, I'm going to try and stream every Saturday, just backtesting because I don't really do anything on Saturday. I'm always free. I usually just clean and organize my week. Yeah, still the same time. Everything is at the same time. I don't try and do anything differently. So it works the same. At least so far. Maybe the last few years are just lucky, you know. Are you still trading? Here's where I wouldn't really call this a trend because we had this sideways price action for a whole session. So, but it kind of resembles one if you zoom out. This would be a trend. Ignore it. Since the government shutdown has been held for me, I'm mostly sidelined. Yeah, I've actually my 2025 model, the one that I've been trading for most of the year on stream. That one I just completely even stopped. Like, well, I still backtested, but I stopped looking for it at all. I'm not trading that. I have no interest in trading that one. It hasn't even shown up anyway. I think it's shown up once in the last month and it lost. And yeah, it makes sense why. Like, the government shutting down is kind of putting a fork in things and volatility. This might also be something that could cause realized volatility to have decreased, because I think initially people were freaking out and now it's just like going on for so long. Economic data starting to release a little bit. The Fed are acting normal. No one's really freaking out anymore and panicking. So I think I'm seeing losing streaks because I haven't been trading Nasdaq. I've been trading Bitcoin for this model, but I'm seeing a lot of losing streaks on the Nasdaq. So I think that's just another example where realized volatility just completely evaporated from the market. Okay, finished October. So October, well, there's a few days left of October that aren't available on the contract, but October, lots of losses. 1, 2, 3, 4, 5, 6, 7, 8, 9 losses, 2 wins. It's basically break-even month. It's a break-even month, so that's actually, I would say that's a bad month. So far, I'll have to do more research on what the volatility was like though in this month before I conclude everything, but no. This is not really a trend because Asia consolidated. Oh my god. This is a trend. Another thing I didn't also consider is Bitcoin might have very limited. It might not be very nice before the ETFs were adopted because institutional flows kind of stabilized the market. So before institutional flows actually came in, the results could be very different. That's another thing I didn't actually think about. But I want to ask the AI if this was the case. So I'm going to have to look at data. I'm going to ask the AI, see if the data is, if it makes any, if it would make any difference in volatility models without institutional sponsorship. So October was unprofitable, actually, which isn't very typical. But this is also when Bitcoin crashed, so I don't know. I don't know what the volatility was like either. I'm just gonna, if it, these look like they're all gonna lose, so I'm gonna quickly go through it and finish on December. Then I'm gonna ask a few questions to the AI because we have an unprofitable month. This is a trend. $25. It's fine. Dang. And it's not like our stops are too small either. Directionally, this is not lining up. Simming here would have gotten stopped. There's another stop. Another stop. Unless I tripled the stop here, actually. It seems like November is when things really start to kick off. I think I have enough evidence to tell it's not going to be profitable. So what I'm going to do now is I'm going to search up Grok. Access the recent Let's actually just start an empty query. What should I ask it actually? No, actually I kinda need my recent queries. I wanna log in. That's not grok. That was not grok. I don't know what that was. Okay. Alright. Oh, there's a lot of stuff here, but basically marked a bullish surge with moderate to high volatility. Push towards an all-time highs. This is the acceleration of 2024 bull cycle. We realized volatility average and it wasn't extreme. Spikes through all month December breakout of 100K. Gold. Okay. Volatility decayed slightly into December as the rally price trumped era tailwinds, but clustered around events December. It was profitable for volume correlated models. Volatility correlated models, but directional burns symmetric strategies. What the heck is a symmetric strategy? I don't care about what drove volatility. This period was a mixed bag. High enough realized volatility for entries, but asymmetric uptrends. Yeah, that's what I was thinking. On session, but yeah, okay. Symmetric strategy profits from volatility in either direction, up or down, without caring about the trend. That's basically my model. Because sometimes I'll go short when it's trending higher, and I'll get stopped out a lot. But if it's so, okay, so far, what this tells me is that there's two things I need to worry about then. Volatility, sharp volatility drops, which usually produce trends. It might also just not have anything to do with realized volatility sharply dropping, and it might just be the trend though, because this is also unprofitable. So far these last few months in October and November and all the way to really August have been super profitable, and this is after things have calmed down from the ETF adoption. And then same with the NASDAQ. But the thing is with the NASDAQ, it's been profitable about all year, and it's really just been increasing. At the beginning, May wasn't that very good, and July, I think, wasn't very good for the NASDAQ. Some of the bigger trending months, and then August was pretty good. September too. October was really good. I think really what this model is good for is when there's a lot of like consolidation, accumulation, distribution. If there's a lot of it'll move sideways and it'll go up very quickly and it'll go down like a huge range, and then it'll continue trending after whatever. That's when my model profits the most for intraday volatility. So it does. I don't think it always means that if price is symmetric and trending in one direction, that it's going to be unprofitable. I think it more so depends on how the intraday looks like, and volatility is also definitely a factor. What I'm going to ask the AI is, I'm going to say, okay, so I found every time the VIX drops, my model is unprofitable, or well, the VXN on NQ. Is this similar to RP fading on Bitcoin. Oh well. I'm just gonna see what it says. Yeah, same thing. So implied volume phasing, gamma over price, realized volatility crushes. And I don't know why it gives me all these programs. It's saying from April, what the hell? April 9 to 11. Interesting. It's giving me a correlation between the drops in Nasdaq's volatility and Bitcoin's volatility. Let me actually see for both models the periods where I was most unprofitable. So this is for Bitcoin. We're only gonna look at 2025. Actually, let's find what I had. Yeah, like start of March is really the worst. Leading into May. May was okay actually. Leading into May. And it's saying April is pretty bad because of whatever Trump said. And July was actually a little iffy here. And then this one has started to be good. But for the Nasdaq, I don't think there's any correlation between the VIX dropping and Bitcoin. It's really June in Nasdaq where things were bad. And I guess April, not really, to be honest. I don't think the VXN dropped by a crazy amount for it to be unprofitable though this year. Let me just look at that real quick. Yeah. In April it dropped sharply, April 10th, and I had MNQ. Is this? Why is it showing me? Oh, that's why there was a lot of losing streaks end of April. It was 2025 model was riddled in. But it started dropping mid-April, maybe towards the end of April. And it really increased, yeah, towards the end. So there was actually a lot of losing streaks. Starting late April, there was one win, another one in May. June was really bad until towards the end where it kind of started to stabilize. So this was the worst period of the year where, again, the VXN, the Nasdaq's volatility index dropped. So what I know is, what I can say for sure is definitely, I'm going to start recording for the video. So after backtesting, I found that the period I was looking at on Bitcoin was unprofitable in the trend. But I've been doing more research with the AI, and so what I found was the most unprofitable period this year, again, was this area here from towards beginning of July from mid-April. That was pretty unprofitable. So in my data, you could see there was a few wins at the beginning of April, but mid-April there was only 2 wins until we got to July. Okay, same thing here. 2 wins until we got to July. that was pretty unprofitable. Now, if I compare that to Bitcoin, I was asking Grok here what the period was. Well, actually, that's not important right now. I was asking what's a symmetric strategy, and that's when the profits are volatility in either direction. So it'll go only up or only down. No, sorry, it'll go up and down. So it'll go up intraday a lot and down intraday a lot. So whenever a market's trending and going one direction, it's not good for my model. So that was why, if I go back to Bitcoin futures, that's why this period was unprofitable. Okay, not because I wanted to see if it would be profitable, even though because there was no realized volatility crush, it was a period of high volatility. So what I found is, if I go to the VIX and I go back to COVID, this area was only more profitable, not because I don't think that the more volatility, the more profitable a model is. I just think the more trades there are, and the more the volatility is there, the more market wants to chop and go up and down, and in bigger amounts, not like be flat, but chop as in go up and down, accumulation, manipulation, distribution. The more money I make. So that's why this is just a period where there was huge moves, and maybe it was like an anomaly. But what I am finding that's very consistent is every time volatility sharply fades away, my model is unprofitable. So here's an example of 2020 with COVID. There's another very good example with Bitcoin. Right here, where realized volatility in this period, in this red area, fades away. And the market's very symmetric. But it's not symmetric in the same way. It's actually very volatile, which is why I'm like, okay, so in a very volatile period, I'm losing money. This doesn't make sense. But it was also after even more volatility was present before, and then it sharply faded away. So even though it was still a bit volatile and it did big moves, volatility left the market and it was unprofitable. But also, whenever price is very symmetric, only going in one direction, I'm also unprofitable. Now the daily chart here, on the hourly chart, it might be trending. So on the NASDAQ, it was trending all year, but it was very profitable. This is because intraday, there's long wicks, and we're going up and down, accumulating, manipulating, distribution. We're consistently doing these small drawdowns where we go back a little bit, we consolidate, we go back to fair value gap, previous days, wick high. And that's where most of my wins are. Like, for example, on this day, on September 17th, we wicked out to a 2-day low, and then the candle's going down, 9:30 opens, and it shoots up, right? But I feel like on Bitcoin, if you go back here in this period of time, we don't really have many retracements that take out the low of the past few days. I mean, we do in these small periods of time, but there's a lot of very quick movement higher, gaps higher, and then it doesn't start to be profitable again until it starts to consolidate a bit more and chop around. And now it starts to have these overlaps of a few days, and back here was probably profitable too, but here was unprofitable. Another symmetric market. I only backtested until like 20th of November, so it might actually start to be more profitable now. I'm gonna go back to backtesting and see. But yeah, so anyways, let me go back to the AI and see what else it said. So I found every time the VXN, which is the volatility index of the NASDAQ, drops, my model's unprofitable. On NQ, is this similar to the realized volatility fading on Bitcoin? And yes, exactly the same regime. So it is the same thing. Not just that. There's two things I need to look out for: is volatility dropping and symmetric markets where we're just expanding and everyone's directional. There was a lot of hype behind the adoption of ETFs. Let me see when ETF Bitcoin was approved. January 11th, 2024. No, there was definitely some more things late 2024. I don't know. Whatever. Doesn't matter. I don't really care. So anyways. this brings me to my next obvious conclusion is it makes a lot of sense why my AI recommended I check out oil, because one, realized volatility rarely fades in this market. Second of all, it's not very symmetrical. There's not many periods where, like, yes, here it's directional, it goes down in one direction, but inside this move down, you've got a lot of up and down. So it's not like this is what it would mean by symmetrical. You have just one type of candle going in a single direction, or almost one type of candle going in a single direction. Right? This would be another example. So in these periods, I might not make money. But then how many times, like in this period, I might not make much money, but this is only 1 month. I'm okay with taking a losing month. But then it immediately starts to chop around again, trade to new highs, and then make new lows, and make new lows, and make new highs. And so I think this is probably the best market I could trade. And I'm going to backtest this now, and next week I'm going to come back with more data on this to see exactly how it did. But for now, thank you to everyone who joined in on the stream. I'm going to upload the beginning of the stream and the end of the stream to YouTube, which just summarizes everything I found and what I was expecting and the goal of the session and everything. And yeah, so now I'm really just I'm gonna backtest oil a little bit for the rest of the day. Maybe go to the gym, eat some food, and relax until I have to get back in there next week into the market. An update on my trading. Let me stop the recording here actually. An update on my trading, just for I don't think anyone's watching right now. I don't see anybody viewing, but if anybody is to watch back and is curious about what I'm trading and how I started, this is gonna be a surprise to some people, but MetaTrader. So I'm going to be trading, I love that sound, MetaTrader. Either I'm going to trade Bitcoin or I'm going to trade oil. Yeah. So either market I'm going to trade, one or the other. And so basically, yeah, it's a $5,000 funding account with Fund Index. It's a CFD broker because Bitcoin isn't available on futures. I'm not sure which one I'm going to trade. Right now I'm going to trade Bitcoin because it seems to be going well, and doing, it's good range right now. But the only thing with oil, the risk is it might be very flat. So what I've done with my money is I've taken it out of my live account because I want to transfer it to my corporation. I have an account in my corporation and I'm trying to fund that account. But because most of my income is going to now be going to my corporation because of my new job, I won't have much income here, and I'm trying to use the money and putting it into ETFs and bonds so that I have a stable income. And basically my investments, my dividends, monthly dividends can pay for my cost of living, and I can just keep as much money in my corporation as possible. So it will take some time before I fund an account again because I've opened a new account and there's like a minimum transfer I have to open. I can't just put $1,000 and start trading with it. I have to put a certain amount, and it's just going to take me a bit of time for me to make that money from my corporate side without having to transfer any of my personal funds, so I can continue to make my bills and basically live bill free because I make that in dividends. So I think just think it's smarter. Until then, expect it to take about 3 to 4 months. Until then, I'm going to give this a try. Based on Bitcoin so far this year, as long as the realized volatility doesn't escape, like the people who leave their candies in bowls out at night and say take one please, and obviously some kids that take all of them. Actually last night it was Halloween and I was a delivery driver, and there was everybody that did that left candy outside in a box. It was always full. Like nobody was trick-or-treating yesterday. I don't know, it was raining and stuff, but anyways, I should have just taken everything. So I expect it to be hopefully passed in a month based on the data so far this year. I don't know. I'll maybe keep a YouTube updated, maybe not. I am keeping my Discord updated, so if anyone ever wants to join my Discord who likes to watch my streams and wants to stay updated on my trading, because I won't have much time to really stream anymore, you feel free to join my Discord. It's always been open to anybody who just asks. I mean, I don't really care, and then you can just be up to date to everything about my trading real time, because that's where I journal too. But anyways, yeah, that's it for the stream. Thank you very much.